Thanks for joining into this earnings conversation with Happiest Minds. Well, they created quite a flutter when they listed with the kind of response that the company got. They've come out with the Q1 numbers, and it seems to be pretty much on ball, but for maybe a deferred tax credit item, which is maybe hampered the bottom line growth. But one swallow does not a summer make in the same fashion. Maybe one quarter should not be looked at what the trajectory is. Let's actually pose that question or those questions, if you will, to Mr. Venkatraman, Narayanan, CFO, and Joseph Anantharaju, Vice Chairman, Designate President and CEO, Product Engineering Services at Happiest Mind Technologies. They join us right now on the show to talk about the quarter gone by and the second half. Gentlemen, both of you, thank you so much for joining in. Either of you can start, but how do you sum up the quarter? Because as I saw the numbers, they look okay, but for that bottom line miss, if you will.
That's right. So on the top line, I'll let Joseph answer that because that's got more of a color to be given from the business standpoint. But as far as the bottom line is there, EBITDA, as you see, has expanded by about 71 basis points from the earlier quarter of Q1 and by a distinct large number year over year. But when it comes to PAT, we had an adjustment that had to be done in Q1 for the catch-up of deferred tax asset that was created. That was about 17.5 crores was created. But the normal charge of about 8.5 crores also continued to hit the bottom line. So you had a net credit of about 9 crores, whereas in this current quarter, you don't have that one-time deferred tax asset creation. As you know, we were going public at that point in time, and our Q1 results had to be updated due to the RHP, which needed to be audited. And so an assessment of the deferred tax asset, which we had never created until now, as a conservative position that the company had taken, had to be made under the Ind AS standards. So that's the only difference if you really look at it. But on the top line growth, yes, we have grown 5.5% in dollar terms and relatively flat in terms of rupee terms. So we had at the time of IPO, end of the Q1 results, told you that we would have a kind of slower growth than expected on the top line, but we would make it up for more than a fair share and improvement of our bottom line, which is EBITDA and PAT. As you could see, we have kept up to that. Over to you, Joseph.
No, just actually, okay, just before we get into the color of the business, a line item clarification that I would want, and which is, do you reckon that there are any more such charges, one-offs that could be there in Q3 and Q4? Part one of my question is that. And part two, would the currency hamper the rupee top line growth, considering that Q2 seems to have gotten impacted by virtue of the dollar weakening vis-a-vis the rupee? And if that were to continue, and one can't predict that, could the rupee revenue growth still be flattish even if the dollar revenue growth is strong?
Yeah, so I'll take the rupee dollar revenue point. I think we are seeing a slight weakening of the rupee versus the dollar, given the election situation that's happening right now, and also certain other flows which were planned, is what I read in the newspaper. So we could see some more weakening, and hope that will help me in Q3 and Q4. But largely, we are also tracking the dollar number because that gives you a quantitative metric of how the company is growing. That's something on that we are tracking.
But
second is, no one-offs is what we do. As far as Q3 and Q4 tax provision will continue, it will be, we are expecting it to be the same 8.5, 9 crore kind of a number, unless there are some other extraneous events that can happen in Q4. But otherwise, it will be the same number.
Okay. Joseph, now, do you want to give us a color on how the business went?
Yeah. So in terms of revenue, as Venkat mentioned, we had a 5.4% quarter-on-quarter growth in dollar terms. And so, some of the drop-offs that we saw and, slowing in the overall economy in Q1, we saw towards the end of Q1 things picking up, and Q2 things have been much better from a market standpoint, and that's reflected in the growth as well. We had 8 new logos that we were able to close during the quarter. And in terms of some of the areas where we are seeing demand, EduTech is an area, within our existing customers and prospects, we are seeing additional traction out there. High tech continues to, see quite a bit of investment, and we are, getting some requirements over there. Online media, things that are more like digital media that gets, delivered to your house. That's another area where we are seeing quite a bit of traction. Just all of these, I think, have some correlation with COVID. And industrial, where we had seen a little bit of a slowdown in Q1, I think customers are coming back. They're investing in digitization, e-commerce, some of the modernization. So overall, I think the Q2 has been good in terms of pickup in activity, and that's reflected in the quarter-on-quarter dollar growth.
Our conversation shaping up for Q3, of course. I doubt that too many corporations would be waiting for the election results to come out before they decide on how would things shape up. And as I see, you added about 8 new clients. So what geographies, what nature of the business are these, and are these large deals or are these standard normalized deals, if you will?
So in terms of geography, I think the positive is that a couple of them are from Europe, which has been an area of focus. So 25% of our the new logos have come from Europe. That's going to be area of focus, and we'll continue pushing hard over there just to take advantage of some of the opportunities and to do a little bit of diversification. And in terms of industries, it's a little new logos. It's a little diversified. We have BFSI, we have professional services, industrial. So we've got new logos from 3 or 4 different verticals. And the good thing is, many of them are large companies where we have the ability to get in and over a period of time help them with some of their initial digital efforts, and then look at continuing and expand over there. So they present themselves very well for future growth opportunities.
Okay. And I heard you mention, just one quick follow-up, Joseph. I heard you mention new logos. By that, do you mean that newer industries opening up for Happiest Minds or for tech at large? Or is it something that on the back of what you've already done?
No, these are net new clients for us, new logos that we've signed during the quarter.
New clients.
There have been several deals that we've closed with existing customers where we've got new projects or new opportunities.
No, I saw you added 8 new clients. I was just wondering if they are from some completely different spaces hitherto for Happiest Minds, but that's not necessarily the case.
Yeah, we sort of focused,
and large deals? Sorry, Venkat, please finish your point.
They're from the verticals that we have focused on. The edutech, high tech, industrial, professional services. So they're from these verticals, the ones that we've been working on.
And large deals, are these large deals? What's the cumulative size of the TCV of the deals that you've bagged in the quarter?
So go ahead.
No, go ahead, Joseph.
Yeah. So, in terms of, we don't really track TCV, Neeraj, but in terms of the potential, many of them have, the potential to become $1 million customers. They're all, large companies or conglomerates where, once we start working with them on some of their initial digital innovation efforts, we'd be able to grow them, which has been one of our strategies, help customers with a pain point and then grow. So they present themselves very well for future growth.
Okay. Sorry, you wanted to make a point.
No, I think Joseph has covered that point very well. It's essentially keeping in line with our point of land and expand. That's been the strategy that we've been talking about. So these are deals into which we enter, and then large corporations and conglomerates, and then you grow into them.
Yeah.
If you see that they're all in very interesting areas, Neeraj. One of them is we're helping them with the chatbot deals to give us, an entry into some of their data and other efforts. Another one is on the drone space, surveillance. Once you help them, with the initial platform, there's a lot of data, then mobile efforts and other things that will come up. So, and these are all good areas that we can take to other customers as well.
Okay,
yeah, I think that's something. Yeah.
No, all the best for that. So client mining is certainly going to be a focus. Just one quick thing. Last couple of conversations that we've spoken about, the conversation was about how maybe work from home and other avenues of cost saving would help in operational efficiencies. Venkat, would you believe a 3.3% EBITDA growth despite a dollar revenue growth of about 5% is a tad bit disappointing, or would you reckon that it is in line with what you would have thought? And what is the kind of numbers, or what is the kind of outlook that you can present on the operational front for the next 2 quarters?
So while staying away from giving any guidance of sorts, Neeraj, I would say that in Q1, our EBITDA percentage was 25.6%, and we have improved that to 26.3%.
Yes.
So even during the results announcement of Q1 and during the pre-IPO interactions with you, Neeraj, we had mentioned that what we will do is expand on the profitability. And we had also said that these numbers may not be sustainable for the very long term, because these numbers right now take you into the domain of the EBITDA, very large companies who have got a huge amount of cost benefits. We are almost in striking distance of almost all the large companies when it comes to an EBITDA percentage. But as a young company, we have to invest in growth. And so to that extent, we will do that. And that will be the focus going forward, while the absolute numbers of EBITDA keep improving. So that's what I would like to answer on that.
Okay, Venkat, final question then. The whole basis of the excitement, amongst other things, I must tell you, I must confess, I'm sure there are a lot of other factors too which go into making such a good company. But this whole argument around digital, and you expanded to being 97% of digital, if I'm not wrong, from 96. If that is any consideration, really, it could waver here and there, doesn't matter. But my question is that is that giving you recognition from companies wanting to associate with you in a small fashion and eventually help you in the goal, as you mentioned, of client mining? Because I would presume that if that is indeed the focus, then you might be getting into companies at cutthroat or competitive pricing, but eventually your pricing metrics could actually improve as more and more things happen within the same organization. Is that something that you're seeing a clear trend of in this post-COVID world?
So on the pricing, I think during the IPO roadshow and post that, we did say that we have not seen pricing pressure in at least the accounts where we are, because the differentiated value of the offerings that we bring to the table is clearly seen by the customer. So to that extent, I'll add that there is no pricing pressure that we are seeing. But with respect to the second part of the question, I would hand it over to Joseph.
So we've not really had to buy our way into any of the logos, Neeraj. But what we've done is, in a couple of cases where customers are trying to figure out a new area, we've gone in and done a POC joint POC or a discovery, a quick thing, just to show that, hey, this works, or this is possible, and then you get engaged. And those, we're very flexible how we do it, because we see it as more of a pre-sales effort that you need to put in, so that you help your customer sponsor also within the company to make a case. But once we are past that, we've not seen any need to really buy our way into the customer.
Gentlemen, as we wrap up, don't mind, I didn't mean that you are kind of cutting your pricing to get in. I just thought that you might be keeping your prices competitive to get in, and then eventually look to increase it. Not cutting your bases, but the base level itself could be normalized to get in and then try and improve. That's what I meant. But
sure.
But wish you all the best for the quarters ahead. Thank you so much for speaking to us today, and stay safe and happy festivities.
Thank you very much. Same to you,
You too. Thank you.